Hey everybody, welcome back to my channel. Hope everybody's doing okay. If you're new here, please do me a favor, hit the subscribe button, the like button, and leave me a comment down below. I'm loving all the new subscribers. I really appreciate all of you, and I'd love to interact with you. So do all that good stuff. Follow me on Facebook, got a Facebook page, all that good stuff. You know, I'm new to this. I'm an old dude, so you know, go light on me on the social media stuff. But today, what I want to bring you is an update, because just last week I had my May dividend update video, and I showed you that I had bought 43 shares of the QYLD ETF, which is the covered call ETF. And well, I've been kind of on a tear with that here in this past week, so I just wanted to give you an update that I'm buying it heavily. So here I had 43 shares in M1 Finance, and as of today I have 66.52 in M1 Finance. But I also kind of went on a shopping spree in my wife's this is the taxable account, and I ended up buying 100 shares of QYLD in the taxable account. So I have a grand total of 166.52 shares, and that's gonna give me a distribution of a little over $400 per year. So I'm gonna keep adding to this thing, and eventually, I mean, right now it's gonna drip a couple of shares, almost a couple of shares per month. But I have a feeling that I'm gonna do this covered call ETF and some of my own covered calls on the stocks I own as a hybrid. I'm also going to be doing my covered call dividend income, covered call versus QYLD update coming soon in the middle of June. There's going to be some big changes in that one. You'll have to stay tuned for that. But if you haven't seen that video, I'll link a card up there to show you what I'm talking about on that one. So what else did I want to share with you today? Well, today I'm sharing with you another fund that employs the covered call strategy. Now, this is not an ETF, and I don't talk about these on this channel very often because it's a very complicated space to invest in. And that space that I'm talking about is closed-end funds. So what a closed-end fund, matter of fact, I'm going to put another card up here because I did a video about closed-end funds, and I really kind of discourage people to just blindly buy closed-end funds, even though they have some very attractive dividend yields. Closed-end funds are actively managed. They have high expense ratios for the most part because you have to pay for the managers, and a lot of them use leverage, in other words loans, to fund their portfolio. So you really have to know what you're looking for, because in the closed-end space there are far more bad funds than there are good ones. But a subscriber actually pointed this one out to me, and I actually owned this when I first started out in 2018 in my M1 Finance portfolio way back when. I've since sold out of it, but it's a great closed-end fund. And that ticker is BST, and it's the Blackrock Science and Technology Trust. It has a covered call strategy as well. That's not all they do, but that they do a portion of their portfolio. They sell covered calls, and we'll go look through here real quick. We'll look at the holdings, and we'll look at the top 10 as shown from Seeking Alpha, and you'll see that it has 50% tech stocks, 17% communication, 10% consumer cyclical, 7% financial, 2.6% consumer defensive, and 2% healthcare. And you'll look at their top 10s. They got Microsoft, Alibaba, Apple, Amazon, Google, Tencent, MasterCard, Visa, Adobe, and CRM Salesforce. That makes up about 32% of the fund. And they have 344 holdings. So a closed-end fund is basically a mutual fund that managers, I'm going to show you on their website, that managers such as these guys, Tony Kim, Kyle McClements, Christopher Acatella, and Reed Mange, they are the ones that make the 1% management fee for the expense ratio that you pay. Well, it's paid out of the fund. Any expense ratio is paid out of the fund. So it has a 1% management fee. Now, one thing you'll have to understand, you'll see more about it in that closed-end fund video I added up there. But closed-end funds trade at either a premium or a discount to the net asset value of all the holdings in that fund, as opposed to an ETF. So in an ETF, their range may be a penny, but it for an ETF, what you pay is what the value is of the holdings at that time. I hope that makes sense. With a closed-end fund, you can buy the holdings inside that closed-end fund at either a discount to the value of all those holdings or a premium. So it's always best. It's not. Some funds don't trade at discounts, but some do. And some trade at discounts habitually, and so usually those are not good. But if you go on to cefconnect.com, I'm right here. I'm looking at BST, and we'll look at the premium. The share price today, $36.19. The net asset value, the NAV of all the holdings in the fund is $36. So you're paying a 0.53% premium. You're paying 0.53% more than what the assets of the fund are worth. I hope that makes sense. But you'll see, you'll see the 52-week average, which is this line right here. It normally trades at a 1.3% premium to the net asset value. Now, there are times when you can buy this fund at a discount to net asset value. So they had a 52-week low. I'm imagining it was very recently in this, it was probably March 23rd when we hit the bottom. And you were able to pick this fund up at an 8.37% discount to the net asset value. So you were paying, if you were able to pick it up at that discount, you were paying $22.41 for $25.57 worth of assets that the fund holds. I hope that makes sense. So right now, BST trades at its NAV pretty much, maybe, a few cents more. So it's a decent buy. You're not overpaying, you're not underpaying, because there's times where you can actually overpay as well, where you had, like here, the 52-week high, you had a 5.49% premium. So those are the wrong times to buy closed-end funds. So we'll look over here to the fund basics. A lot of times closed-end funds will use leverage, and it looks like they have a $1 million loan out, and it doesn't even show interest expense. So I'd have to dig a little deeper into that to see what that $1 million is. But that's next to nothing. A lot of closed-end funds, see this effective leverage right here. A lot of closed-end funds operate in the 30 to 40% range, so they utilize a lot of leverage. So that's good on this fund. We'll go to distributions. I looked when I saw this, I was like, whoa, what happened here? But they paid out a huge $1.85. It wasn't quite that. I think it was $1.60. Yeah, $1.68 plus their monthly long-term capital gain distribution here at the end of December. So you'll they don't do that every year, but they have to pay out all their net investment income to the shareholders. So you'll see they increased from last year from 15 cents per month per share to today's distribution of 16.55 cents per share per month. Now, the difference between a fund like this and an ETF like QYLD, you may experience some upside to the fund. With QYLD, the way they sell their covered calls, they kind of limit their upside even more so because they sell in money. Blackrock, BST sells, a little bit out of the money, so they can get the upside as well. So you can this fund actually, I think in the past 5 years have outperformed QQQ. I didn't check that. That's just what my subscriber said. Let's check that real quick. We'll go to etfchannel.com. We'll type in BST, hit enter. And then we'll go. This is a pretty young fund. This thing was only around since about 2014. So we'll just say the past 5 years. Let's go 2015 till today. And we will compare it to the QQQ, which is the Tech Fund. And we'll just chart it and see. And we'll see BST with dividends invested had a total return over those 5 years of 198.22%, whereas the QQQ had a total return of 139.83%. So a big advantage. Average annual total return 22.33% for BST, 17.51% for QQQ. That's if you are, I think there's a big bump there for that big capital gain distribution if you reinvested that on BST, but nevertheless, it is a strong fund, and it kind of gives you the best of both worlds for capital appreciation as well as yield, because the yield right now is 5.23% paid monthly. Now you're going to have a fixed dividend with this one. It's not going to vary, kind of like QYLD. Depending on when QYLD does their distributions, it's whatever they get for that month is what they pay out. So it's going to vary. With BST, since it's a closed-end fund and it's actively managed, they set policy that they're going to pay a certain amount each month, and they stick to that, whether they make that money or not. So that's a little deeper into how closed-end funds work. So please do your due diligence on closed-end funds before you invest. BST is a great fund. It can give you the best of both worlds and dividend and upside. But closed-end funds do come with risk, and you need to know that. So I know this went on a long time. If you stuck with me this far, please leave me a comment down below and let me know you did. I appreciate each and every one of you. Hope you guys have a great weekend, and we'll talk to you later. Thanks. Bye-bye.